cruisers, hotels, and casino operators. These three form part of a sector in the stock market called consumer discretionary, which, as the name implies, basically means companies in this basket are subject to whether consumers believe that it's something they want to do or afford. Some other subsectors of this market include luxury goods companies like Ferrari, LVMH, and Hermes, auto manufacturing companies like Tesla, Toyota, and BMW, restaurant names like McDonald's and Starbucks, and your home builders like Lennar, D.R. Horton, and Polk. Home improvement names like Home Depot, as well as the large internet and e-commerce names like Amazon, eBay, Booking, and Expedia also are some companies in this list. Consumer discretionaries generally perform better with a robust economy and strong employment data. In times of crisis and rising unemployment, certain subsectors are actually quite susceptible to consumers like you and I cutting back on spending in this sector of the economy. This is in stark contrast to the next sector, which is generally more resilient to the economic cycle: consumer staples. Hypermarkets like Walmart, Costco, household product names like Procter & Gamble, Clorox are two examples of subsectors within the consumer staples space which demonstrate much more resilient in their earnings even in the downturns of the economy. While many may not choose to buy a new car when they have just been retrenched, most of us will still have to purchase groceries or household products. Some of the other subsectors in consumer staples include personal products like Estee Lauder, tobacco companies like Philip Morris and Altria Group, beverage names like Coca-Cola and Pepsi, and packaged food companies like Nestle, Mondelez, and Kraft Heinz, amongst many others. Some investors take advantage of the defensiveness of consumer staples in economic downturns to outperform the broader market. Another sector that's also extremely close to the consumer is the communication services sector, home to the large interactive media and services names like Alphabet Inc., also known as Google, Meta, which was formerly known as Facebook, Spotify, Airbnb, and Uber. Some other subsectors also include movies and entertainment industry, which includes the likes of Netflix and Disney, electronic gaming companies like Nintendo, EA, Activision Blizzard, and of course you have telcos like Verizon, AT&T, and a majority of other media companies like Fox Corp, for example. The communication sectors is generally involved in media, entertainment, and wireless communications, which are broadly classified as a growth sector. Unlike consumer discretionary stocks, the correlation of company performance to economic conditions is less clear. For instance, a gaming developer and Netflix might still perform well in a downturn if consumers choose to stay indoors for entertainment to save on expenses. Next up, we have financials. This sector is often confused by some to be just the big banks, the big diversified banks like JP Morgan, Citibank, HSBC, or it may be at best expanded to include the investment banks and brokerages like Morgan Stanley and Goldman Sachs. But beyond these infamous international names, there are many big names in other subsectors like the asset managers, for example, BlackRock and Invesco, insurance companies like Prudential, Swiss Re, and Ping An Insurance, your consumer finance names like American Express and Discover Financial Services, financial exchanges like S&P Global, CME Group, and Nasdaq Inc., and of course the many numerous smaller regional banks around the world. Financials are very exposed to the health of the economy and central bank policies as well. Generally, the sector is considered to be cyclical in nature, and we will definitely be diving more into specific sector dives in this channel subsequently as well, so stay tuned if you're interested. And of course, if you are finding value in this video so far, we really do appreciate if you give us a like, comment, and subscribe for more of such future content as well. We aim to make investments easy to understand for our end-of-day money community. But now, let's get back into the video. Since we're on the topic of cyclical sectors, let's talk about another: industrials. The industrial sector includes airline companies like Delta Airlines, Singapore Airlines, Ryanair. We have machinery companies like Caterpillar, Fanuc, Vesta Wind Systems, your aerospace and defense names like Boeing and Airbus, Raytheon Technologies, and Lockheed Martin. Specifically in the USA, there's also the major railroads like Union Pacific, CSX Corporation, and many more. Building product companies like Train Technologies, Johnson Control International, as well as Carrier, and of course your big conglomerates like Honeywell, 3M, and General Electric. Industrial companies, broadly speaking, are cyclical in nature, as companies' expenditures take into account economic environment. If sales are not expected to pick up in the near term, maybe firms might choose to hold off non-core capital expenditures for a little bit later. And next up, let's talk about materials, also another cyclical sector. Within the materials, we have the metals and mining companies like Freeport-McMoRan, Newmont and Alcoa Corporation amongst many others, specialty chemical companies like DuPont, Sherwin-Williams, industrial gases like Lin and Air Product Can Chemicals, commodity chemicals like Dow, paper packaging companies like Vulcan Materials and Martin Marietta Materials, amongst of course many others. Material sectors companies are generally exposed to their underlying commodity prices, either as raw material feedstock or for instance prices of metals like copper and aluminium. As such, they tend to be a little bit more cyclical in nature. Similarly, energy is another sector that is very cyclical and also affected heavily by oil prices. We range in this sector from the large oil majors like ExxonMobil, Royal Dutch Shell, Chevron, and the entire oil and gas supply chain, really ranging from upstream exploration and production companies like ConocoPhillips, refinery and mining companies like Marathon Petroleum, Phillips 66, you have your storage and transportation companies like Kinder Morgan, Euronav, oil gas equipment and services firms like Schlumberger, Halliburton, Baker Hughes, and of course you have some clean energy alternatives like Green Plains Inc. Utilities is the next sector and is considered a defensive one, so shifting from cyclicals into defensive now. We have ranging from electric utilities like NextEra Energy and Duke Energy, water utilities like American Water Works, gas utilities like Atmos Energy Corporation, multi-utilities like Dominion Energy. Even in a recession and economic downturn, we will definitely still need electricity and water. Numerous stocks in this sector also have significant exposure to themes like clean energy, which could see a higher than industry average growth. So it might not be completely defensive, it might have a bit of growth as well if you play the right themes. Real estate sector is predominantly filled with REITs, which is an acronym for Real Estate Investment Trusts, which basically allows individuals to invest in a portfolio of large-scale income-producing real estate. This sector is generally split into the exposure of the REITs. For instance, you have offices and office REITs like Boston Properties, you have your healthcare REITs like Welltower and Healthpeak Properties, retail REITs like Realty Income Corporation and Simon Property Group, residential REITs like Avalon Bay Communities and Equity Residential, industrial REITs like Prologis Inc., and of course specialty REITs like American Tower Corp and Equinix. REITs are generally income-producing assets which are affected by interest rate cycles and can be seen broadly as a cyclical sector. And let's catch our breath because we're going into the last two on this list, which are also the largest in the US stock market's S&P 500. Let's first talk about healthcare, a sector that is known to be defensive or also growth within the subsectors itself. Subsectors like medtech, medical technology is among the fastest growing subsectors within the sector, consisting of robotic names like Intuitive Surgical, Stryker, and also other medtech firms like Abbott Laboratory, Boston Scientific, and Medtronic. We also have the giant pharmaceutical names within healthcare like Johnson & Johnson, Merck, Pfizer, just to name a few, and some biotechnology names like Amgen, AbbVie. Your life sciences tools and services companies like Thermo Fisher and Illumina. And specifically for US, we have the healthcare providers and services like United Health as well as Humana. Healthcare services companies like CVS and Lab Corporation of America, and of course many others in the healthcare space. And finally on this list is the last sector and also the largest one on the list, technology. Starting from of course your big system software names like Microsoft, Oracle and ServiceNow, moving on to your application software companies like Adobe and Salesforce, your hardware storage and peripherals like Apple, HP and Seagate, maybe some semiconductor names like Nvidia, Intel, Qualcomm, Micron, Broadcom, just to name a few, data processing names like Visa, MasterCard and PayPal, and many other subsectors as well. Technology is generally considered as a growth sector and has been one of the fastest growing sectors in the past few years. Many upcoming trends like artificial intelligence can also be found with names within this sector, and we will dive deeper in more of certain trends on the channel, but I hope this big overview of the entire stock market is helpful for you to begin your search in finding the right companies. If you found this video helpful, leave us a like, comment and subscribe for more of such future stock market videos. You might also find this video we have here, which we talk about artificial intelligence stocks as well. Thank you so much for watching and see you in the next video.